Hey, this is Sasha Evdokov, and welcome to another episode of Let's Talk Stocks, episode number 192. And in this episode, we're going to take a look at what profit potential can you expect trading iron condors. And we're going to cover three main points. We're going to cover why is it important to know your profit potential, what determines your profit potential trading iron condors, and how to increase your profitability potential with iron condors. And we're honing in and focusing on iron condors because we do have the Options Mastery Iron Condors course ready to release. You can see this course is quite long and lengthy, and we try to make our material as valuable as possible, as detailed as possible, so that way we don't miss things out. So initially we'll cover some core lessons for the course, and then eventually we'll get into trade examples. So trading Amazon to Facebook to Apple, and trading balanced and unbalanced iron condors, as well as buying some iron condors. So I'll share with you all these different strategies, along with, of course, adjusting and how to tweak these positions when they go against you. And then you'll also have some bonus material and, of course, a study guide for some of the modules, at least for the core modules where there are lessons involved to on screen, and the foundational lessons. So that's what we have lined up for you as far as the Iron Condors course. It'll be set to release on Monday, and if you're interested in this course, make sure you get on the newsletter list, which is under this video, or at the end of this video there will be a link where you can click it, enter your name and email address, and that'll put you on the newsletter list. So when it's set to release, which is when we do promotions on new released material, you can get it at a discount, on sale, and it'll be available for just a handful of weeks. And then we'll close it down, so that way if we need to make any tweaks, adjustments, add any modules to the course, then we can do that, and it'll be available again later on in a couple of months, but of course at a higher price. So anyways, if you're interested in that, make sure you get on the newsletter list either under this video or at the end of this video, or visit our website, and that way you can stay up to date as new things are released. So with that in mind, let's move forward into our lesson today, which is what profit potential can you expect with trading iron condors. And we're going to cover those three main parts. Why is it important to know your profit potential? What determines your profit potential trading iron condors? And how to increase your profitability potential with iron condors. So let's start with point number one. Why is it important to know your profit potential? And let's start out with sharing a little story with you about how I used to go running in Florida on the beaches. So back when we used to live on Bradenton Beach area in Florida, I used to take my bike and ride it down to the beach when I wanted a little bit break from the screens. So it took maybe 15 to 30 minutes to ride the bike, depending on how quickly you went. Ride down to the Gulf of Mexico there, or Longboat Key area. And then you have another island that connects to it, which is Anna Maria Island. And these two islands connected to the mainland by two bridges. And in between those bridges, there was kind of resorts and things like that. And you had restaurants kind of right near the bridges. So where people got off on those bridges by car, there were those restaurants. So I would go ahead on the south end, park my bike over there, tie it up, lock it up, and go for a run. So initially, I would start out the run lightly when I first started running. Okay, so I knew, okay, well, I'll go a little bit and then I'll come back. And I realized I enjoyed that run, the running process, to listening to the water, the waves, going on the beach, just a little bit of a getaway from your normal routine. And slowly with time, I continued to stretch my muscles, my distance, because, hey, I realized, oh, this was easy. I could make it back pretty easily. So I go a little further, then I had to come back. Because again, you have to ride the bike back to the house. I didn't want to take my car. Sometimes it was tourist season, so it's very busy and a bike would be just as quick. So I go ahead, just go a little further. I'd run a little further, then I come back, run a little further. And this continued to stretch my potential. It continued to stretch my comfort level and ability to go a little further. Now, I knew that, hey, if I could go to the other end, I could go ahead and pick up some water, but initially that was still very far. So knowing how far you could get, it takes time. And when you know that potential, you got to get back. But it shows you, hey, what's possible? Is it worth it to go for that run? Hey, can you go a little further? And you just continue to stretch those things. So this is what you're really doing when you're looking at iron condors, is you're slowly looking at, hey, well, what is it that you can do with iron condors? How far can you get with iron condors? And is that profit potential worth it? Now for me, running, getting away from my day-to-day screen activities, that was worth it to me. You're also working on your health, but I wanted to see how far I could get. And with iron condors, you might be looking at it the same way. Hey, how far can you get? Where can you really take this? And what profitability can you really make with these trades? And that's kind of important to see, because then you see, hey, well, is it worth it to even do these iron condors? Do you really even want to invest your time and energy with them, or even the training behind it? Maybe you just want to put your money into passive dividend stocks. And that's perfectly okay too. But knowing your potential allows you to see, hey, is it worth your time? So that's what we'll get into here as we look at profit potential. And first off, well, what is it that determines your profit potential? And I look at it in a couple of different things. Really, it's time, energy, and water or weather conditions, which is what determined my running ability, right? So the time I had available before that sun set in Florida, they were very picky about closing those beaches at 10 o'clock. So even though I might do a run, sit for a bit, run back later, 10 o'clock was kind of the limit. You got to make sure you're kind of off the beach or not creating ruckus. So looking at the time you had available, you have to make sure you start out early. So I would start out maybe 4:30 riding my bike. So that gave me kind of the time availability. It gave me much more time to go out and do my run. Next thing would be you're looking at energy. How much energy did I have? Now you could say energy would be experience, because as you're stretching your lungs, your muscles, that would be your experience. Okay, so if I was running consistently, then you could go ahead and run further because you had that experience. But also weather conditions, right? So if the weather was bad, if it was windy, it was much more difficult to run. And all of these things start to create kind of your conditions on your potential of how far you could get. Now, I could increase some of these things, which we'll talk about in a minute, but really those are the main things. And when you look at iron condors, you have the same concept. You have time, okay, how far you go with iron condors, experience, capital, and market conditions. A few of these things you can control. For example, your time, you can control how far out you go in time. Experience, which is the course that we're covering, you can build your experience. And trading more, you can build your experience. Capital, you can slowly grow through trading or putting in more capital, but it's a little more difficult to control. And market conditions are really out of your control. So let's take a look at kind of your profit potential with iron condors as we look at, the time factor and the experience factor. So I want to go ahead and look at our trading panel here. And this is one of the trades we did just a few weeks ago that we put on, and some people said, hey, well, let's take a look and review that trade. And here we're looking at Apple, and you can see we set this trade up, a handful of days ago, maybe a couple weeks back, where our profit potential here on just 5 contracts is $360. Now we're already up at 183 on 2,140 on our capital, okay, or risk. So let's take a look at a calculator here, okay. Let's say 188 on 360, or 188 on our maximum is 2,140, okay. And it gives you an idea that you're basically making about 8% return already on your investment, which is quite fantastic. And you can see we did this in just a handful of weeks, okay? And what this does is we're doing non-directional trading, and with time, that white line, which is today's line, gets closer and closer to that expiration line. Now, if we let this expire, let's say $360 on 2140, you'll get about 16% return on that investment, which is pretty good. It's fantastic return on investment. And it just shows you the profitability potential on this trade. Now you could go ahead and take any trade on this example. Let's say we go ahead and put on Amazon here. So let's say we adjust our factors, right? Our profit potential. Okay, we'll go ahead and let's do an iron condor right here, 36 days out. I'll go ahead and do an iron condor here. Let's do a little quick setup. So we'll go on the put side, and I'm choosing these, let's say about between 5 and 10% probability. Let's say about 1500 and 1520 on the put. Okay, so 1500, and we'll do 1520. And on the call side, we'll do, let's say, again, about 10% probability or so. Let's say about 2000. Okay, so 1980 and 2000. So we'll bring these strikes in a little bit. So here is 2000. Let's go 2000 on this one. So here's 2000, and this is the 1980. Okay, so you can see here we've set up an iron condor, and now here's our profitability potential. So we have $337 on potentially $1,663 worth of risk. So let's put that in perspective. 337, divide that into our 1663, and you get a profitability potential of 20%. Now you may not make the full 20%. You may only hold it, for a couple of weeks because you're 36 days out. So let's say you hold it, a handful of days, you might make, and the stock will move. Let's say you make $170 on that 163. So let's say you make 175 on our 1663. You'll still make about 10% in 36 days, okay? Because we're going out 36 days on this trade. Now let's say we go out further, because time is one of the things that determines our profit potential. And let's say we go down into about October, okay? So let's take this trade into about October, okay? Let's go back to current day and today. And now let's take a look here. You have 685. This is, keep in mind, at the same strike prices. 685 profit potential. And then you're risking 1313. So let's take our calculator. 685, 1313. You make about 52% return on your investment because you're going out further in time, which is one of our conditions. Now, of course, this is a higher risk trade because you're in a little bit tighter because there's so much more time for that stock to wiggle and move around. So if you go ahead and, let's say, take this off a couple of weeks later, you might only be up about $100. But then again, $140 on 1308. On 1308. Okay, you can see about 7.5% there return on your investment, because you probably wouldn't keep that all the way to expiration. Now you could widen things out, right? Probabilities, like let's say I go ahead and move these strike prices, and that would reduce your profitability potential. But this is one of the main things that as you start looking and stacking, you can see the percentages of what's possible. So let's say I go ahead and you have maybe a little bit of a larger account. Okay, let's say you have a $13,000 account. Okay, $13,000 right here, 13,250. And then you take a look at your profit potential. Again, I'm only taking it a little bit further because you probably would take it off a little sooner. You wouldn't keep this all the way to expiration. You might make, let's say, $1,400 on, let's say, 13,000. So 1403, let's pop it in. 1403 divided by, okay, and here we go at 13,230. 13,230. Okay, so you can see still about 10%, 10.5% there. Now let's say things go a little bit against you here. Okay, so here, let's say you go a little bit to the upside, you could make 400, or they go down, you make about 600. So let's say about $400 on 13,000 in capital. Now keep in mind, you're taking this off early, so again, you're churning that that capital. Okay, so here 613 on 13,200. 620 on 13,200. You can see about 4 to 5%. So this is really what you're looking at when you're looking at profitability and potential when it comes to iron condors. Now this is, we're stretching the time here, right? We're stretching the time. If other conditions, let's say maybe market conditions, the volatility spiked up here with the VIX, you could go ahead and get more for these spreads, because what happens to these contracts as the VIX goes up? Well, you can sell them for more money. Let's back this up a little bit. Let's go into, again, August, okay? Let's make it live price. So here, as we go back and we start taking a look at the profit potential with even more contracts, because you could keep in mind, stack some of these on Amazon, stack some of these on Apple, stack some of these on Netflix. And as you continue to grow, let's do another one on, let's just do high positions. Let's do another one on Apple, just to show you. I already have one on Apple that I just showed you earlier on this, but let's just take a look here. Sell an iron condor. Analyze the trade. And on the call side, we'll do maybe about 210, 205, and the put side, bring that in a little bit. So here you can see I'm spending a little bit less capital because it moves a lot less than Amazon. So here, take a look. Let's go about 10 contracts, right? You're risking about $4,200 to potentially make $730. Okay, so let's say you didn't make $730. Let's say you made about $300 because you took it off early, whatever the case may be. Market conditions weren't set up. So let's say you make $300 on this 4270. Okay, 300 on 4270, and you can see you'll be at about 7%. Now, as again, you keep stacking this with more contracts, let's say you go into 25 contracts. So think of this as, if you're running, you're stretching your lungs, you're building experience. Now you're spending $10,000 and you're making about $1,800. So let's look at it. 1,800 on about 10,000 invested, you're making about 18%. Let's say you didn't make the full 1,800, okay? Let's say you made 600, okay? Let's say you got 600 on 10,000, what's the 10,675. Now you can see you make about 5.5%. And that's, again, keep in mind, in as we look at the trade, you're looking at here 36 days out, okay? Now you could add this to a kind of a portfolio beta weighted, so you have Apple and Amazon together, risking about, let's say, $43,000 in capital. And here, your potential is to make $9,221. So 9,221 divided by 43,035. 43,035. You can see you make about 21%. So this is what you're looking at as you're looking at potentials, right? Now that, I would say, is a little bit strong on the profit potential, but let's just say you get part of that. Let's say you don't get $10,000 or $9,000. You take it off early, and maybe you're not back in the middle. Let's say you go a little left or right. Well, here you're $2,890 on 43,000. Okay, so 2,890 on, what do we say, 43,035. You can see you're still at about 6 to 7%. So this is really what you're looking at when you're looking at profit potential on iron condors, is you're looking at, hey, well, depending on the amount of time, like if you go further out, let's say more time for, instead of August, you go September, October, November, well, you'll make more because you're going out further in time, but you're creating additional risk. You're looking at conditions, right? Weather conditions. So if you go ahead and say, hey, well, the market VIX is higher, well, if the VIX is higher, well, you can actually make more on this because you're able to sell more of that premium because this makes it more expensive. Capital is not something that you can control, not right away directly. You have to add more capital. So you could go ahead and increase your capital usage, of course, but when you're first starting out, you're going to start out small. So those are kind of the main things, but of course experience is the main thing that you can control, because if this thing starts to go a little against you, well, what do you do to save the position? What do you do to take off the position? What do you do to hedge that position? And that's really what we talk about in our Iron Condor course. And that's kind of the key, because what you don't want to happen is you don't want to get into these problem areas where you're losing $12,000, $14,000, $15,000 on maybe just only making $5,000 for that month. So that's really what you're looking to do, is you're going to look to stretch things. And it's kind of like when I used to go running. Well, how do you stretch certain things? One of those ways is, again, education. But for me, when I went running on the beach, it would be to stretch it by bringing a water bottle, right? So instead of now having to, hey, I'm stretching my lung capacity, I'm stretching how far I can go. Well, that water bottle allowed me to go a little bit further, allowed me to refresh myself, rehydrate myself. And that's kind of what, courses allow you to do, and education allows you to do, is it allows you to stretch and go a little bit further. So how do you go ahead and increase this profitability potential with Iron Condors? Well, again, we talked about increasing your time, which again would also increase your risk potential, because as you increase your time, and let's go back to our Amazon example. Okay, so here's our Amazon example. As we're tighter right here in this position, okay, what we can do is actually get even closer and tighter with it. Okay, so we could go ahead and go, let's say, instead of right here at the 1980 and the 2000s and the 1520s, well, if I look at my technical analysis and know my adjustments, let's say I go ahead and bring these in tighter. Okay, so now, okay, you're increasing your risk, but of course you're going to increase your profit potential. So looking at this one, you're looking at 10,400, right? Because I'm closer here compared to the other one. 10,400 profit potential over 29,600. So let's take a look at that. So let me bring in this calculator. So here we have 10,400. Divide that by 29,700. You can see you're up about 35%. So that's a huge percentage on return. Whereas here on the other one, right, it's wider, okay, but you have less profitability on the return, but it's safer, right? So here we're looking at 7,600 on your potential return over 32,400, 32,400. So you can see you're making about 23% return. So here we had basically the one that's higher risk increasing 35%. The other one is 23%. So that's because we're tighter bringing in our risk. And this is what you're doing as you go further out in time and don't adjust your strike prices, is you're going to increase that risk, but you're increasing your profit potential. The other thing that you can do to increase your profitability is, of course, build that experience. So the more experience that you have through courses, material, or just putting on more trades, you're going to increase your profit potential because you're going to know when to take things off. It also allows you to be more creative with your trade. So instead of doing a spread like this, let's say I go ahead and do something a little more custom. So what I could do here is I could go ahead and say, well, I think this stock might be a little more bullish or bearish. And I could reduce some of these contracts to, let's say we go to 12. So now I create this unbalanced Iron Condor. And I could keep doing this a little bit more right there and say, hey, well, I'm a little more unbalanced, a little more bullish on this setup. And that's what experience allows you to do, is it allows you to be a little more flexible with these things. So you can see I can skew it this way. I could even skew it a different way if I wanted to the other side. That's what you can do. The more you know, the more you can do with the trade on the setup. Of course, you could increase your profit potential by increasing your capital, but for many people, that's a little more difficult to do because you need to put more capital in, or of course, use more capital. And market conditions. So if you had very favorable market conditions, that also would increase your profit potential. But again, it's not something that you kind of can just change or flip, because those are out of your control. So you basically need something extra to increase your profitability potential when you're looking to trade iron condors. When you're looking for, what is it that's possible? Well, really looking at it, 5%, 7%, you saw those potentials. Could you get into the 20, 30%? Yeah, you can, but you're increasing your risk. And in order to make that a little more sustainable, you have to have more experience, the market conditions need to be right, and many other factors need to line up. But one of the easiest ways to really stretch that profitability is to look at your experience. It's kind of like running with a water bottle. It's very simple. I can just go out, grab my water bottle, and now I can run a little further because I, don't need to run back and grab water at the initial restaurant where I parked my bicycle. So the same thing with iron condors. When you're looking to increase your profitability, you're looking at increasing your success rate, it's about building that experience. You could do it with capital, you could do it through market conditions, but those are a little tougher to control. You could do it with time, but you're also increasing your risk. So experience through knowledge, education is one of the easiest ones, and just like picking up a water bottle, that's the way to kind of do it in a quick manner by getting that experience, by looking at courses, getting that education. It'll allow you to really tweak these iron condors and the profitability potential on them much more so. So thank you so much for joining me in this week's lesson. I hope you found it helpful to seeing what profit potential you can expect with iron condors, along with how to increase that profit potential with iron condors. So if you're interested in our iron condor course, then be sure to get on our newsletter list by clicking the button right over here. Enter your name and email address when you get there, and we'll send you the announcements when that course is released next week. So thanks again, and remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you in the next lesson.